All right. So, welcome back. And today we're going to talk about something very interesting happening in the Bitcoin market. As you know, there has been a massive run, and I don't just mean like a regular massive run. I mean a really game-changing massive run on the Bitcoin market. And what do I mean by a massive run? I mean there has been a buying spree happening at historic levels. As I've already explained to you, in the last 5 months, we've seen all the ETFs just in the US acquire about 1 million Bitcoin, or one Nakamoto of Bitcoin, as Michael Saylor put it the other day in his tweet. 1 million Bitcoin, which is about 4.5%, or a bit over 4%, 4.33, 4.25, whatever it is, more than 4% of the 21 million Bitcoin that will ever be available, ever. There's only going to be 21 million, never mind. There's already been 19.7 of them, 9.7 million mined. And the remaining 1.3 million will take another 116 years or so to mine. What that means, very simply, is that there's basically nothing left to be mined and sold. Now, why do I say that? Well, currently, the acquisition rates of Bitcoin exceed the production rates by more than double. That means for every Bitcoin that's being mined fresh off the blockchain, there's 2 or more being purchased. And the people who are buying them, and it's really not even just people, it's the wallets making the purchases are the wallets of very, very large whales. They are the ETFs, they are the big banks, they are the whales who have significant amounts already and want to acquire more. Now you'd think to yourself, well, hang on, if only whales buy this stuff, how will it have any value if all of it is owned by a few thousand organizations, banks, companies, whatever, governments? How will there be any value to the average person? How can the value of this stuff continue to rise over the coming years if it's all bought and none of these people will sell? Well, the truth is they will sell, right? They will sell at a significant premium, and because they know how to watch things like the volatility, which is what we trade at Alpha Trading, they will sell when it's high and buy back when it's low, because they know the average retail trader will make the foolish decision and buy when it's high and sell when it's low, because the average retail trader has no clue, and that's on purpose. The average retail trader has no clue about when it's high or when it's low, since they don't even know what volatility is. The average retail trader is misled by news, by economists, by analysts, by talking heads, by pundits, by all kinds of people who will tell you that volatility is the volatility of price. Well, in a random market that is inefficient, when you trade assets, there's really no such thing as a volatility of price. Yes, you can argue that price going up and down very fast or whatever, or very slowly, demonstrates a volatility of price. But that volatility of price is not indicative of where price is going on this candle or the next or anywhere in the future. Whereas the volatility, which is actually the standard deviation of returns, that can tell you that, especially when you correlate it properly to the price action. So the price action alone cannot tell you the direction, but when you correlate the price action with the volatility, well, that volatility combined with the correlation of price action, that can tell you, and it does tell you, the very likely tendency of where the price is going to go on this candle and the next. Now, why would anybody want to keep traders in the dark about this? Well, it's not that hard to figure out. If the big whales are able to make a profit by accumulating as much as they can and then selling off small portions of it to retail traders who want some, and they sell it to them at a premium, or they sell it to them at a high price, and then they buy it back once the price starts to dump out, and the retail traders panic and get scared because they're afraid of losing their value in the Bitcoin they hold. Well, it's very easy then for those big whales to buy that same coin back at a cheaper price. And so that's exactly what we're seeing happening. And if you hold Bitcoin, you might yourself get those willies, those shakes, those scares, that panic, that fear when you see price start to tumble. But the thing is, if you look at it from a long, you'll know this is still a relatively new asset class. It's only 15 years old. In the world of stocks and bonds and options and commodities and currencies, 15 years is not a long time. And sure, Bitcoin has had a meteoric rise since its inception and since it first went on the market. Right? When it was first launched, it cost nothing but the electricity to mine it, or the labor you gave in exchange for any Bitcoins you accepted as payment, which is something I did for a long time, because I would mine at the very beginning of Bitcoin's existence, and then I would pay people in Bitcoin for certain things, like content or small computer parts, that sort of thing. And I always had in mind that we are just at the very beginning. And I always knew the first couple of decades, even the first several decades, would see this asset still be in its relatively early stages if it ever caught on. And it certainly has caught on, since there are now some 200 and something million holders. Out of the 200 and something million holders, the vast majority, obviously, hold far less than a Bitcoin. And when you consider that the whales who own big bags actually have many of those millions of the 21 million that will ever be available, and on top of that, something like anywhere from 4 to 6 million of them, it's estimated 4 to 6 million of the 21 million are inaccessible. Never will they be accessible, at least at the moment, because their keys have been lost, or they sent it to the wrong address, or they sent it to an invalid address that nobody accesses, whatever it might be. Those Bitcoin are gone. So that's more than a quarter, or about a quarter on the low end, you could say a fifth, anywhere from a fifth to a quarter, anywhere from 20 to 25%, maybe more, are gone forever. So that means that only 75% at most, roughly, or 80% at most, roughly, of all the Bitcoin supply that will ever exist will actually be available just to hold or to trade. When you toss on top of that the fact that many of these coins are literally in wallets of holders who never intend to sell, or they intend to sell only tiny portions and then buy it back when the price dumps a bit, it's a far, far lower number. We're talking about just a couple million Bitcoin on the entire market are currently available. And the way that the whales who want more continue to acquire is they buy from people mostly who have weak hands, who lose trades to their exchange, or who just go to their exchange and sell, or who sell on their wallets, or they dump them however they can as soon as the price starts to dump out to a point where they're not comfortable. And that's causing those weak hands, the hands of regular people, to lose all of their Bitcoin and give it away basically at bargain basement prices to these big whales. Now you could say, well, what are you talking about? $70,000 is not bargain basement prices. You know, even 1% of that is $700. Right, 1% of that is $700. And if you're a big whale, $70,000 is considered very cheap when you consider that it's also perceived to be a very low risk asset at the moment, because all of the banks are buying in. Now, I mean, they used to do this quietly, and they've been buying in for at least 5-10 years in many cases, but now they're buying publicly, and we see that on their SEC filings and other documents, so we know these whales are accumulating as much as they can. I don't know how I can really make it any more clear other than to tell you there is a rush to buy. It is FOMO like crazy in the world of those who have a lot of money, and it's not by mistake that they're doing it over the counter or in other direct ways through back channels, connections they have with miners, connections they have with retail traders, etc., who are eager to sell to them to cover their costs, etc., and it doesn't affect the price this way because it's not bought on exchanges. And by doing that, they're accumulating as much as they can. And yes, you can say, like I said in the previous video, you could say, well, the price went up from 15 grand to 70 grand over the past year and a half. That's true, but the 70 grand isn't far above the all-time highs that we saw back in 2021, which was 69K, almost 70K. So it is still very much within the realm of where it's already been before, and they've already made the purchase of more than $1 million. And you can rest assured, especially if we have a further dump, but even if we have a run up to 100K, they're going to continue to buy as much as they can. They're going to keep buying from retail traders as much as they can, right? Anytime there's a bit of a dip, they're going to buy. They're going to keep doing this until they own absolutely every last coin that they can get their hands on before the market is completely sold out, in the sense of there will be very, very little coin to go around. But of course, keep in mind, there will always be some coins going around, because there will always be people who need liquidity. There will always be people who want to access some, and so they'll pay a premium if they have to, and they'll be happy to pay for it, and they don't care, because they know it's better to own some and hold on to it than to not have any at all. So the active market will stay liquid for the foreseeable future. It is very probable, and that means that as long as there's a demand and there's a very low supply, in the long term, this will have an effect of the price going up, because basic economics 101 says when there is a high demand and a low supply, price goes up. Just as when there is a high supply and a low demand, price goes down. It's the law of supply and demand. So keep that in mind if you're a Bitcoin holder. You will see continued volatility. You will see actual volatility of the returns. You will actually see prices continue to go up and down and up and down and up and down. You will see moments like we're having in the last couple of months where it's just basically driving holders crazy. People who are expecting it to moon because we just had a halving, even though we all know it takes time for that, price increase to happen, even if it, and it may not happen for a long time, right? And there's no guarantee that it'll happen, but the statistics say it probably will. So yeah, keep your Bitcoin, hold it, and acquire as much as you can. Stack sacks. See ya. Happy trading.